Hi guys, welcome back and let's continue our Forex technical analysis for swing trading. Okay, today is March 18th and Tuesday, and let's start with the USD index chart. Here we have the market consistently behaving below the blue moving average line. In other words, the trend is clearly down, retracement down, and market is expected to continue to go down like this. So in other words, USD is getting weak against other pairs overall. That means we're gonna look for opportunities to sell USD. So let's write it down. Today is 18th. USD index trend is down and we're gonna look for opportunities to sell USD. Okay, now let's analyze the first pair, USD Japan Yen. And last few months, as you guys can see, market behaving consistently below the blue moving average line, which means the trend is down. USD is getting weak against the Japan Yen, right? So for example, down leg retracement, down leg retracement, down leg retracement. So we have our latest down leg like this, and market seems to be retracing, and currently market is faking out really nicely here, and which retraces around the 60% zone, which is a really good zone to sell USD Japan Yen right now. So I have sold risk in 1% of my account at the 50% retracement here, and right now market is currently retracing about the 60%, which is a really nice zone to sell USD Japan Yen. So I would highly recommend selling USD Japan Yen right now. So if that is the case, set your stop loss about the local maximum here and set your take profit at the Fibonacci extension 1.618 down here, and your risk and reward ratio would be around the 1 to 3. Alright, let's continue. So USD Japan Yen, currently trend is down with the fake out. We all know market lows to do fake out, leg size is nice, and I sold risk in 1% of my account at the 50% retracement. Okay, now next pair, USD Canada Dollar Loonie. So here we have market behaving consistently below the blue moving average line with more than 10 candles. At this point the trend is reversed, trend is considered the down. So leg size is not really nice, but I would say okay, and I would expect the market to go a little bit more down like this. Then if the market retraces into a good zone, at least the 50% here, then I would recommend selling Loonie. So right now it is better to wait, and USD Japan Yen looks best to sell. Okay, let's write it down. USD Canada Dollar Loonie, trend is down, leg size is okay, and our decision is to let the market mature a little bit and wait 50% retracement. Okay, USD Swiss franc. So here we have market behaving clearly consistently below the blue moving average line. Trend is down. So we have the latest down leg like this. The leg size is considered okay, not really nice, but it is okay. So market keep retracing and reach the 40% retracement zone here, and after that market seems to be returning into original trend. So right now market is not in a good zone, so it's better wait. So USD Swiss franc, trend is down, leg size is okay, and our decision is to wait. If the market somehow retraces 50% zone, then it would be good to sell USD Swiss franc. Okay, pound USD. So here we have market consistently behaving above the blue moving average line. Trend is clearly up, which means USD is getting weak against the pound, right? So we have up leg retracement, we have the latest up leg like this. So if the market retraces into 50% zone here, then it would be a really nice trade opportunity for risk and reward ratio 1-to-1 trade. So until that, we're gonna wait. So leg size is just seems a little bit big, but it's doable. Pound USD trend is up, leg size is okay. Our decision is to wait 50% retracement. Okay, Euro USD. So here we have the huge up leg like this, and of course we don't expect the market to demonstrate Fibonacci extension from this big leg. So if the market retraces into 50% zone here, then I would buy Euro USD for risk and reward ratio 1-to-1 trade opportunities. Until that, it's better to wait. So Euro USD trend is up, leg size is too big, and we're gonna wait 50% retracement for 1-to-1 trade opportunity. Okay, Aussie. So here we have market behaving clearly above the blue moving average line. So at this point the trend is considered to be up. If the market keeps retracing into 50 to 60% zone here, then I would recommend buying Aussie. So right now it's better to wait. Market is not in a good zone. So Aussie trend is up, leg size is nice, and our decision is to wait 50% retracement. New Zealand dollar USD. So here we have the market behaving consistently above the blue moving average line. Trend is up, USD is getting weak against New Zealand dollar USD, right? So we have up leg retracement, up leg. So we have the latest up leg like this. So leg size is nice, and if the market keeps retracing like this and reaches into 50 to 60% zone here, then it would be a perfect opportunity to buy New Zealand dollar USD. If that is the case, I will set my stop loss above the local minimum here. I'll set my take profit at the Fibonacci extension 1.618 up there. Your risk and reward ratio would be about 1-to-3. So let's write it down. New Zealand dollar USD trend is up, leg size is nice. Our decision is to wait 50% retracements. Okay, so what do we see overall? So USD index trend is clearly down. As of today, USD is getting weak, and most of the pairs are not in a good zone, so it's better to wait, except the USD Japan yen. So right now USD Japan yen has a really nice downtrend with the fake out, which is fine. Market loves to do fake out, and currently it is at the 60% retracement zone here, but I sold USD Japan yen risking 1% of my account at the 50% retracement, which is still a good zone. So if you guys are looking for opportunity to trade right now, so I would highly recommend selling USD Japan right now. Set your loss above the local maximum here. Currently market is behaving between the 50 to 60% here, which is a perfect opportunity to sell USD Japan yen. Alright, thank you guys watching. See you next time.